If you want to know how a good starter ETF investing portfolio looks like, then this is the video for you. Let's go. So guys, welcome back to Inside Investing, and in today's video we're going to show you how a great starting ETF investing portfolio looks like, because from our end ETF investing is the way to go. If you don't know yet, ETF investing means that you're buying buckets of shares, so a lot of different companies included in those ETFs, and that will make you invest in a lot of different companies just by buying one simple ETF. And this has been the strategy that we really have applied throughout our investing career. So for example, the S&P 500, but also the VWRL, of course, which you know that we really like. And in today's video, we're going to give you an update on how our portfolio looks like. As you can see right here, we've got the shares and then we've got the trackers, the ETFs. And let's start off with the first share that we own, that's Coca-Cola. As you can see, we currently hold two of these shares, made around 15% already. So guys, the first lesson that we want to teach you here is that shares are higher risk than the trackers. Right? Because a share means that you're buying just one separate company in comparison to, let's say, the global clean energy, digital security, or the S&P 500, right? With the S&P 500, just by buying one of these shares, you have 500 different companies in comparison to just buying a share of one single company, then you own one company. So that's the largest difference here, and that's the first lesson. The second lesson is that you don't directly need to stress if the price is low. In this case, we see a positive number at Coca-Cola, which is good, but it could also be somewhere in the minus, as you can see right down here. But we are long-term investors, guys, so we don't want to make a quick buck. We don't want to earn a lot of money in like a month or so. This is long-term investing, meaning that we want to invest 5, 10, or even 20 years from now. This means that a short dip in the price when you could be at a loss doesn't really matter, as long as you don't need the money that you have invested, which is then the third lesson, guys. It's very important that you don't invest more money than you could afford to lose. And that's also why we've only invested the money that we can afford to lose, right? So if we lose this money, we're not bankrupt. Bankruptcy! There's no real big deal. And that also gives us some leverage on the pricing itself, guys. So that's what we really like. It doesn't really matter that we see a couple of reds right here. All of these are in the minus. Once again, we're long-term investors, guys. And then looking at a couple of ETFs that are currently in the plus. So those are the semiconductors. That market has been booming the last couple of months. So that's great to see. And then also, of course, VWRL. This is our all-world usage ETF. It's a distributing one, so this means that we're going to get paid out some dividends as well. And of course, we love ourselves some dividends. A lot of different companies are included. So that also means that in this ETF, Tesla, Apple, all of those big famous companies are included in this ETF as well. So that's great to see, and it's currently at a plus 4.81%. So you would see that the overall price trend of such an ETF is quite stable. So you're not going to see plus 10% on one day and a minus 10% the next. Also looking at then the last ETF that we currently hold, that's going to be the S&P 500 usage ETFs that we currently have a profit of around 4.88%. So let's go to the last lesson of this video. Now showed the available to trade money and as well the total balance of our portfolio. So this is around 2K currently, the balance of our portfolio. So over the last couple of months, we did receive some dividends, of course, because we get paid out dividends from this VWRL and also from this S&P 500. And what we really want to do is reinvest that dividend, guys. So as long as you're long-term investing, please don't pay out the dividends and go buy yourself one coffee once every few months. No, just keep it in your portfolio and buy a couple of new shares once in a while, because that will really help your portfolio grow in the long term. So that's what we really want to show you as well. So overall, we're in the plus now. That's great news, and we're more than happy to show you how our portfolio is improving over the next couple of months. Also, we're going to be buying a couple of new shares as well, and we're going to show that to you in the next video. So if you've got any questions, then please leave them down below. If you've liked this video, then please give it a thumbs up and subscribe if you haven't done so already. And then we'll see you in the next one, guys. Let's go.